Two reasons why Rivian surged 13% this past week. The first reason, well, price pulled back to a daily bias level at $20 and then surged higher as it did find buyers. Also worth noting is that the 200-day moving average was just below the bottom of the zone, which served as dynamic support. We also had the golden cross, where that's where the 50-day moving average crosses over the 200-day moving average, that occurred back in early August. Now, the second reason why price rallied, Rivian made an interesting announcement regarding the range achieved with its new Enduro drive units on Wednesday. In addition, booming sales from Chinese EV peer lit a fire under the stocks of U.S. EV companies on Tuesday, and positive news on inflation helped as well. On Tuesday, the U.S. Labor Department released its July jobs report. It showed a big drop in job openings in July from June and revised the June numbers downward. Why would that be a good thing? Because the U.S. still has an inflation problem with many more jobs openings than unemployed people. That has led to surging wages and therefore services inflation. So theoretically, lower job openings could bring wage and broader inflation down. That could enable the Fed to stop raising interest rates and potentially even lower them, which would be a relief for long duration assets such as growth stocks like Rivian. Growth stocks tend to have the bulk of their profit power far out into the future, and some growth companies might also need to raise more capital to grow. Then on Wednesday, Rivian announced that its R1T electric pickup truck achieved a 410-mile range when equipped with the company's new Enduro dual motor drive unit. Enduro has been highlighted by management as a breakthrough in performance that also uses fewer parts and therefore lowers costs. Rivian pursuing its in-house Enduro motor unit is probably a smart strategy, as vertical integration will help lower costs of expensive EVs while also creating more brand differentiation if the engineering feat succeeds. But that pursuit is costly, as Rivian's large operating losses show. Still, the prospect of lower interest rates and important technology milestones helped spur more optimism for this high-risk growth stock this week. So how high can Rivian go in the short term?
Rivian, probably because every other day my wife says, "Hey, we should trade in a Tesla and get a Rivian." But honestly, the Rivian has shown like some resilience more recently as things have been kind of beaten up. It held its 50-day moving average. It's starting to come back. It just cleared its 200-day moving average, and it's in a space that's like not that's super popular, generally speaking, but hasn't become overly popular in the EV space yet, and that's trucks and SUVs. When you have a family, you want more space, and if you're thinking you want an EV, I mean, until that Cybertruck comes out, and we'll see how the competition is. Rivian's kind of the spot to be if you're looking for a truck or you're looking for an SUV in the EV space. So that's why we like it kind of heading forward. And there's also just a lot of trend strike behind it, and it's clearing the right moving averages. So if there's one outlier out there where, hey, maybe we could potentially hit a home run here, it's probably Rivian. Of course, we have to make sure that we trade manage it too, so that we don't get beat up real bad.
So a $30 target. Yes, it's very possible. However, I have a $27 target. Until we get past this support resistance band at the 27.50. We get past 27.50, my target is not 30, but the next level where there will be sellers coming in is going to be at the round hole psychological number of $40. So here's what things would look like. Let's draw it out. We're at the bottom. First impulse move up, pull back. Second impulse move back, pull back. to the mid short-term target. Again, pull back to daily buyers, impulse move, pull back to what will be support in the future for the next impulse move to $40. Thanks for watching. Subscribe. Please like the video.